Morning, everyone, and welcome to the Messer Financial Weekly Sales Training Webinar Series. Mark Conter from our offices in Mint Hill, North Carolina, just outside of Charlotte. We focused ourselves this year primarily on life insurance and the ability to follow the proper steps to enable us to get a sale in life, and we've done a pretty thorough job there. Again, those webinars have been recorded. If you missed any of them and you want to go back and review them, just go over to the Messer website and you'll find under the Tools of Agent Resources our Learning Center, and there you'll find the webinars themselves, which have all been posted. We're right up to date with the exception of the webinar provided last week by Michael Gendy of the Guaranteed Trust Group. So again, you'll have pretty good coverage there if you want to go back for review. As we proceed during these weeks before our major event, the Expo, that'll take place here in Charlotte on September 11th and 12th, we're going to do different types of presentations with different products. Today being the disability one that you've registered for. And we're also going to do some work with a product offered by MassMutual that will allow long-term care funding options with life insurance. We think that would be beneficial to you. We're going to get into some indexed UL training. That's going to be provided to you by North American and Charlene, who has worked with us on a number of occasions in the past. We will then take a break following into that month of September as we hit that Expo on the 11th and 12th. So we'll be shut down on the 13th and on the 20th, actually. And then we'll come back and we'll get into the products that should be preparing for at this time, that being your Medicare Advantage plans for the over 65 market. And then we're going to get into the Medigap plans, the supplement plans as well. So we'll get prepared for that season. And I hope you're doing well in your certification, getting all that out of the way, both for the over 65 and under 65 ACA business. So with all that in mind, we'll start today again. The disability program. First, I think it's important to recognize that disability insurance is actually a health-related product. And you'll see that if we get the time today to go over and do some illustration work on the WinFlex web. That's my intention. So it doesn't follow under life insurance. You're still alive. It's a benefit or insurance type of coverage for the event, obviously, of becoming disabled and unable to work. And with that in mind, then, let's move on to our synopsis today, of course. Again, in the event that there were such a thing as an illness or an injury that prevented you from taking time to be able to work, and you would have that loss of income, certainly having a source to replace that loss would be greatly beneficial. We're going to talk about the two types of disability coverage that are available in the private insurance sector, which of course is going to be the work that we'll be doing as agents when we're out in the field. The actual objective today, first and foremost, is going to be to recognize that difference between disability insurance and workers' comp, to be able to look at and describe what a short-term policy of disability is, as well as what a long-term policy is. And then we're going to look at where and how you can attain the coverage, what those benefits of coverage would be, and options that are available with the coverage that one would seek. We're going to talk about the 4 issues here today again: disability insurance, workers' comp, long and short term types of disability. Disability insurance, probably as you've heard, or the acronym you're most familiar with is DI. It's also called disability income insurance, and it's also often referred to as income protection. It's a form of insurance that again insures a beneficiary an earned income against the risk that a disability created that would be a barrier for them to complete the core functions of their job. Then we have workman's comp or workman's compensation. So that is another acronym sometimes referred to as workman's comp. We'll talk briefly about it. And that's the form of insurance that the wage replacement, medical benefits, etc., to the employee that's injured in the course of the employment or the exchange for mandatory relinquishment of the employee's right to sue his or her employer for the tort of negligence. So that's why it's provided by an employer or through the government as well when you have that portion of protection provided to an employee. So again, with an employer's contract to that employee, the employee actually gives up his rights to be able to sue the employer for the possibility of negligence that could have taken place and caused the accident at the work, and then of course forces the hand of the employer to be able to provide a financial benefit to that employee for that act of negligence. Short-term disability, we're going to touch on it as well. And again, it's just what it says. It's a temporary disability program for the short term. And it could be also due to sickness or an injury that was not related to a work environment situation, as would be the case with the workers' compensation. Just out of interest before we go on, let's do a first polling question this morning, if we could, Rebecca. So my thought here is just to get an idea of your involvement with disability in the past, if you have sold some, or perhaps you have sold some but it's been a while and you're kind of here for a little refresher. Or again, perhaps this is something that's just totally new to you and you really haven't worked with this product before and you're just here today to kind of pick up a little bit of information and hopefully add it to your repertoire. All right, so we've got a pretty good return on the votes here today, and interesting, we've got 13% who have sold it. 13% who have sold it, but it's been a while, and a full 74% basically that are with us today, 3/4 of you that have really not ever sold a product, which is great. Okay, so we just talked a little bit about short-term disability, and we'll get into details, but basically what takes place when someone goes on disability, there's going to be a time period before a long-term product could kick in for them, and some employers will provide short-term disability, but not long-term. Some will provide both. So most people, though, will find themselves in a situation under a disability unless it's an employer-sponsored benefit and they have taken the time to get some for themselves on the outside from you, an independent agent, will not have the coverage. Oftentimes you'll hear people talk about, too, that You know, life insurance is very important, and we've structured an entire season on the benefits of life insurance and how to make that happen. But unfortunately, there's probably more cases of disability going to have a need for someone prior to uh, their death, obviously, that would be a benefit that they might have more need for sooner than they would even on a life insurance. So if we go over to the next portion of it again, we're going to talk about the long term, and that's going to be a percentage of the salary when you become disabled for an extended period of time. And again, it's going to pick up where short term left off if there was a short term policy that was being provided, or it'll be a long period of time, honestly, 6 months to a year, to wait for disability such as Social Security disability income. So if you don't have it, most people probably couldn't survive without that income for that long a period of time. The, again, benefits provided with the short term, we're going to replace some of the income. We'll talk about the numbers here in just a little while. It will, of course, require that a premium payment be made. It will require documentation as far as the claim that could be filed. And of course, it also will include a waiting period before that claim would be paid. So with that in mind, the short-term benefits themselves, we're going to take a look at the length of those benefits that can be offered, the options to move to a long-term at some point when this would expire, the actual percentage of the wages that would be remunerated with the insurance coverage, and over to the disability of insurance provided through Social Security. So someone could have short-term coverage and not have long-term and be provided with some income for a period of time, but then there would be a gap that would occur when the short-term would end before the disability insurance benefits would begin. So that's always something important to keep in mind. People may have some basic knowledge, understanding that there is such a thing as Social Security disability income, but they really won't know how it works. So it'll become your responsibility as an agent, obviously, to make them aware of the lapses in time and the lack of funds that could be available to them for perhaps, again, as long as a year before that disability claim on the government Social Security level is actually approved and begins paying out, which obviously could be decimating to a family. Now, when we look at the long term again, we're going to be talking the same basic ideas. We're going to talk about replacement of income. Again, of course, it's going to require that a premium payment be made. Documentation as well would be required for the actual processing of that claim, and it too will have a waiting period. Those will be some of the things we'll look at as options that a client would choose when they would actually put together the policy format. On the long term again, we're going to talk about how long the benefits could be for. So it's not necessarily, again, short term is going to end, and when long term begins, there's going to be options for how long one could receive those benefits based on that disability. Again, we're going to talk about the percentage of the wages that it's going to be able to fulfill. And then we're going to talk about how does that option with the Social Security disability income work? What happens when it kicks in and you have a long-term disability policy in effect? The eligibility, again, and types of applications that are going to be available. Well, again, we mentioned earlier that some people may have a benefit provided by their employer, and that employer may provide both short and long term, but normally they don't. If they provide, they usually provide a short term, but not the long term. But again, there are employers that are going to give you both. Sometimes these benefits are offered by trade union. And what I mean by that specifically, or where you're going to run into it more often than not, I guess the first thing you think of when you think of trade union are, a factory type or warehouse type or storage type of working people. But it's actually the main trade unions. Unions not really in the sense of the word as a union, but perhaps a better term would be organizations. A primary example would be the dental trade, so that the American Dental Association itself, in relationship to those dentists as registered dentists, can get some great disability benefits of insurance through their national organization. So it's one of the areas that you may run into some competition. And when you do work with the professions that have these benefits available, and different types of physician organizations also offer DI through their organizations, you're going to need a very strong player to contend with that type of a program. And we're going to talk about the carriers that you would use for your general marketplace, people that are earning less than $100,000. And we'll talk about the carriers that we would work with here at Messer to assist you when you're working with the high dollar, high roller, doctor, lawyer, Indian chief type of players, so that you'll have both of them available to you. Of course, then we have ourselves. That's our job. We're out there as insurance agents. Hopefully, we're going to have the opportunity to discover with perhaps small groups that you're working with, to be able to go into an employer and discuss putting together a small group package for that employer. Or again, just that individual that you'll meet in your basic day-to-day work, whether it's in the health insurance side or the life insurance side, that could use that additional protection. It would probably become part of your discovery. As you may recall, when we worked on the life insurance program and we were doing our fact finding, we did ask if they had that coverage. Now, again, our primary focus at that time was to lead us into the life insurance coverage. However, again, when we build a rapport with the client and we have that trust, once we've completed that first step of business, we will have opened that door to that opportunity, perhaps to come back and discuss the benefits of providing disability insurance. So again, that's where we're going to step in, and that's where we're going to look at opportunities on the group side, on the individual side, on the short term, and on the long term type of program. The benefits themselves, you're going to see, will have what are called waiting periods. And the waiting periods that we've been alluding to as we've gone through this presentation this morning is the time before the benefits actually begin. So it's not a waiting period to determine whether your health was of fitness to provide for that benefit, but it's a waiting benefit until you actually receive those funds. Now, not to say that there can't be waiting type of periods due to health, because again, disability insurance is a health product, and therefore, unlike your ACA coverage today that is going to cover everyone regarding all pre-existing conditions, that will not be the case with a disability insurance presentation of information or illustration. So sometimes existing health conditions are going to cause the client to be declined the benefit. It's not uncommon as you open up your wings and get into this business that you're going to run into people, and I guess it's kind of unfortunately as we do with life insurance, where somebody finds out that they've got some serious health conditions, and then they decide they want to try to get some life insurance, and as long as those conditions aren't critical or going to be a chronic condition for long term, they may be able to get life insurance that's underwritten. However, more so in the disability side, some people will recognize that they have an issue. I think one of the most common ones is a type of a back injury or back issues that a person has, and recognize them as they're going through their day-to-day work. Oftentimes, that person will step forward and try to get disability insurance because they're concerned about that future, and that they really recognize the fact that it may come to the point that it may knock them out from doing their work. So unfortunately, what will normally take place with that situation is the discovery through the underwriting process. And because of that back issue, that client probably will be declined and not be able to find coverage for the future. The benefit rates that we're going to talk about are going to be reviewed here as an illustration purpose, and the actual amount of time that the benefits will be paid, so the actual benefit period. As we were talking about on the pre-existing condition, when you have a group coverage, the group coverage is usually based on, obviously, the size of the group themselves for the cost, but they will structure an enrollment period. So it's normally, when someone starts, perhaps after 90 days, they become eligible to enroll in the employer benefits for health insurance, perhaps a life insurance policy, or also perhaps a disability policy. The benefits, though, of the group is that those disability benefits will come in and they will cover them even if they have that pre-existing condition. So a benefit, obviously, of the group product versus the individual product. There will be limited underwriting. There will be some, but it's basically kind of like a final expense underwriting situation where the underwriting is the application, and certain conditions that would be declared on the applications could be a declinable circumstance. But again, it's minimal. And then there is normally a service wait period before that product is made available and becomes a benefit to that individual employee. On the individual side, it's pretty short and simple. It's a fully medically underwritten product. So there is no such thing as in life insurance that you could have a simplified issue where the underwriting perhaps would be very basic. No, this is a fully underwritten product, and it will 100% of the time do a full investigation of the health, existing conditions, the need for a APS from the physician to determine what type of conditions might exist. Obviously, just like other types of insurance, they'll be able to see from the prescription medications things that could be taking place that would open up doors to discover and determine conditions that might already exist that would be uninsurable risks. Okay, so back to our disability long and short term. Here's some of the very, very basics. On your short term, you could set it up for as little as 0 to 7 days, some policies. So in other words, it would kick in almost immediately. 7 day window, window of any time between 0 and 14 days, a 14-day window, a 30-day, 60 and 90. Well, once you get out that far, it's kind of eliminating the benefit to having that short-term disability. And you'll find that most of them that are going to be written or that are going to be covered are going to be in this 14-day range. So I guess you're trying to basically say that most people should have at least 2 weeks of savings to cover themselves before the short term would kick in, which would make very good sense. Because once you get out to getting into the 30 and 60 and 90 days, more so today than ever, more people are not in a position that they could cover their overhead with just that cost of savings. Again, on the long term now, though, that's going to be different. The long term, the shortest period you could have for long term to kick in would be 60 days. 90 days is probably the most common that's chosen in a plan for long term. Could be up to 6 months, or it could be for as long as 365 days. Again, you're not going to see much of that. Again, most people aren't going to be prepared to handle that long a period of time without coverage. But 90 days, again, is pretty common for long term, and 14 days is pretty common for short term. Now, the benefit periods themselves and how long can they run. So on that short term, let's say that they did have a 7-day wait. Well, they could have a policy that would pay their benefits for 3 months. They could have one for 6 months, 12 months, or even, believe it or not, some short-term policies can provide benefits for up to 24 months. Obviously, when you start to mix and match these benefits, the cost is going to be escalating. So you can imagine that if we went back just to our first slide here, if you went with a very short term of 7 days for the policy to begin on a short-term basis, and then asked for it to last for 12 months, the cost of that product is going to be quite large. On the long-term side now, again, remember that we're going to find most people are going to look at a 90-day waiting period or 90-day elimination period, and the product itself would begin to pay them and could pay for as short as 2 years, 5 years, 10 years. It could pay all the way out to age 65. And there are some policies that are written that enable them to collect even that disability out to age 67. Now, again, what we're talking about is strictly private insurance provided either through the group, which may provide both, or individual. The next part of the benefits that they could receive will come from the government. So the SSDI, the full Social Security disability income, or the supplemental security income, another terminology for it as well. We're not going to focus on that today, but we're going to touch on it when we get into the illustration work for how it could have an effect on the options that one chooses when you're illustrating the product. Now, in addition to those basic benefits that we've discussed, you will have additional benefits to choose from. So again, you start adding and enhancing the product, and obviously it's going to have an effect on the cost of the premium for that product. So, often referred to as ONOC, you'll hear, meaning that the disability benefits will be payable for as long a period of time as you are unable to go back to your original occupation. That might have a serious consequence, let's say with a physician who has an accident and loses the use of his fingers. Obviously, the best coverage for him would be an ONOC, because with his abilities, he could perhaps have the knowledge to go into another occupation, perhaps even teaching, that would allow him to continue to receive benefits. Any occupation, meaning that again your coverage would be good. If and coverage again on that option of any occupation that one might be able to pursue. You can build in with it the cost of living adjustment so that there is an inflationary type protection built into the policy over the years of time from when you initiate it to perhaps the time that the need would arise. You can also build it in with future insurability. Some policies will allow you to add the critical illness benefits. And there are actually policies that will allow you to go ahead and receive a return of premium after you've completed the entire contractual obligation of that policy. Now again, these are your basics, and again, this will be provided to you if you want to use snapshots of the screen for your own learning. And this pretty much takes us to the end of that portion of the presentation. So what we're going to do next is we're going to go back to, if I can, get the screen going and get us back here to the WinFlex web. And you should be somewhat familiar with this screen. Now, we've used it in the past in our presentations. And again, I've asked you to, take the time to get registered with the different carriers that would provide the benefits. As you look at the carrier list here on this side, we're going to run down, well, I had it already run down earlier, but we're going to get down today. We're going to take a look at the Mutual of Omaha disability products. What you're going to note, though, you see there's the Mutual of Omaha United of Omaha division. There's the Mutual of Omaha Companion Life, and then there is the Mutual of Omaha Health, because again, disability is going to fall under that health insurance portion. So let's go over and let's start ourselves a little presentation of information again. We're going to open up a new case. We're going to find again our Mutual of Omaha Health from the companies we're selecting, which is going to show us the benefits that they provide. You'll see there is their long-term care product as well, as a matter of fact. And other types of long-term care products, again, available through them, because long-term care, just like DI, is going to fall under the health scope of your licensing and appointments. And we're going to look at the DI Choice product. So with that in mind, we're going to go ahead and, okay, yeah, DI Choice. No product notes available. As you can see, as we open up the screen to start our illustration work, the first box that we have available is for long-term. You could open it up and see short-term. If we have time today, we'll go back and do a short-term illustration type. Um, but if we don't, then I would just ask you to kind of make it your own homework assignment. I think the most important thing to be aware of going forward, though, as you look at short-term and long-term, the cost of short-term insurance is going to be quite expensive for an individual. Um, their best bet is if they can perform in such a fashion that um, they can provide for themselves for the short term and not pay the cost of short-term disability. But we might have time to get in there and do one. So today what we'll do again is we're going to work with our generic family, Thomas Anderson, whom we worked through the insurance business with. And Thomas's date again of birth was 01/01, 1982, which will make him 35 now. You can look at the risk class, and as you open it up, you're primarily going to focus on a standard risk class. If there are other issues that might cause you to have potential underwriting issues, you can look at other classes, but keep your life simple and use the standard class. Obviously, they show or they ask if the client is a railroad employee, because railroad employees are all provided with some type of disability insurance, as would a government employee. Now, occupational choice, it's a little different, and if you did a thorough needs analysis, you would have a knowledge of your client's occupation, which you're going to need in order to do the disability quote. What we found with the gentleman we're working with, Mr. Anderson, he's managing an automobile dealership, and he was later on promoted, we found off in our work when we did our policy review, but we're going to work with the basic management position today to begin with. Now, all occupational classes are coded, and the benefits and the way they can be paid and the benefits and the amount of time that they can be paid for will be affected by the actual occupational class. So when you need to look them up, make sure this tool is still working. There it is. Okay, so when you open it up, you can see that there are a number of different occupations that you can work from. By clicking on one, if he was an attorney, it's going to bring you to a point where it says go to legal and see a description on the legal side. That's going to be over here on the side. You can choose other additional information, but let's go with our auto industry sales manager. And let's just take a look here. See if I would put him there. No, let's go back up on top. See what we have in the auto industry, if we have something. Oh, automobile dealership. Okay, let's try that. And as it happens, that the first one that comes up in the category is a general manager, finance manager, business manager. Again, our client Thomas was a sales manager to begin with, and he later on becomes a general manager. But let's go ahead and we'll use his sales manager position that he's been in for at least 2 years and has an income of at least $35,000. So he's going to get rated as a 4A. On the income, when we started working with Thomas, he was making $60,000. And just for purposes, he was right here in North Carolina. Okay, before I go on to the next step on this illustration, if you would please, Rebecca, you want to throw out that second polling question for me, please? Okay. So, what percentage of income will a person be able to attain with disability income? Our votes are starting to come in now. And the more of you that would vote would be better to get a good picture. Also tells me if I've lost some of you, that you may be working on your other screen. So the participation rate is a little less than it was on the first one. But as your screen of information shows, a majority of you, greater majority, 70% have chosen 60%. And smaller percentage, 14, have chosen both 70 and 75. And the actual answer is 60%. Most policies can be written at the 60% level. There are exceptions and ways to offer more for higher income earners, but most policies are going to issue at 60%. Okay, good, and thank you all for that participation. Now, what it also gives us is some clues of information. Your client may qualify for savings because of self-employment savings, well, association memberships. You'll also see that we get down to the benefit period in that long-term disability and the elimination. So let's just open up the screen and see what it does. Okay, so in this position, our client Thomas could qualify for the 2-year, the 5-year, the 10-year, or all the way out to age 67. And what we're going to do is we're going to go ahead and give him the best benefits possible. We're going to take him all the way out to the maximum age. Also on the elimination period, as we talked about, you could start with as little as 60 days, 90 days, 180. So we're going to go into that 3-month window. I'm going to give him a 90-day elimination. Now, as far as the premium, just like life insurance, we're going to make this set up on a monthly bank draft program. And we're going to set them up for the maximum benefit. And he doesn't have any existing coverage from his employer, so we won't choose any of the options here. And we will, when we come down here to the social insurance supplement, we're going to cover that. And we'll talk about how that works. And that his Social Security disability insurance, they're going to give us a broadcast on that on the supplement. If we chose not to do and we covered it out, we could actually make changes. But we're going to go ahead and click from there. All right, any riders that we might want to attach? Again, we talked about COLA for the cost of living adjustment we could do. We could have extended coverage for owner-occ. That in future insurability, we could add critical illness, confinement benefits, return of premium. And again, every time you can imagine, as you would click on this, it's going to cause an increase in those costs. Also, on the monthly expenses, this would be used when you're going to do an owner's overhead insurance type of protection. so that the owner could cover business expenses that he might see. We're not going to open that window today, but it's another type of DI insurance separate from the actual disability of the income, but to cover occupational costs. Then, of course, your pages, we're going to leave it in the good, better, best format. Don't need any information here on the home office. Your information will already be populated when you set this up on WinFlex. So let's come on back here. Make sure I've got that. And like everything else, when you work with WinFlex, the nice thing about the system, again, is that if you do anything improper, miss anything, it's going to give you an error message, and you'll have to be able to, it'll tell you to identify where that problem existed. So we've got a good basic start here. Let's go ahead and calculate our results and see what we're going to get for Thomas. And let's see here. Okay, so I did have an error. So we need to go back and fix that. You might know what the specific amount is if he's been receiving those statements from Social Security should he go under disability. We're just going to go ahead and click it on the maximum. Okay. Let's try this one more time and see if we're in a better position. Okay. So this is going to come to us again in the format off of WinFlex as a PDF, one that you can basically open, review, save, send, do a number of good things with. But here we go. Okay, so all our basic information. He's going to receive a monthly benefit of $3,500, which includes his base benefits and his Social Security income rider. It's very important to know and how that's going to work, which is a base benefit package of $1,500 a month with coverage on the Social Security income side. We didn't offer any waiver of premium, but you can see the cost of those two items on that monthly basis. His coverage is going to be $75 a month. And again, that's going to be for a total of $3,500. And just as a quick calculation here on the side, I'm just quoting that out, and that would be $3,500 a month. Oops, $3,500 a month times 12 months would be approximately $42,000. So it's a little higher than that 60% number on his $60,000 income. And that's because of the benefit included with the Social Security disability rider. Okay, so here we go again. And we're talking about the policy for Thomas we set up with a 90-day elimination. We're going to cover him all the way out to age 67. Again, like all good illustrations, each individual item is explained so that you as an agent can take the time before you meet with the client, prepare yourself with an understanding of how it works. We did not include the waiver of premium. Talks about the eliminations and exclusions, even covers the pregnancy issues, gives you a good definition of what takes place in the event of a pregnancy. But it will pay benefits when there's complications of the pregnancy as if there was an illness. So again, knowing that and how it works. Specific state limitations also to review. Here's the Social Security income elimination and disability rider that again was presented based on his income to be approximately $2,000 at the maximum side. So what's taking place is, again, the policy he's paying for is going to give him $3,500 a month. $1,500 of it is really the policy, and $2,000 of it is really, the best way to explain this is in advance of Social Security. Now, we're all aware of what happens as a individual salesperson when you receive commissions. If you receive advances and for some reason the policy cancels, that insurance carrier is going to come back after you for those commissions that you were paid in the advance. So I'm using that terminology to help you here as well with the thought on the Social Security, because Social Security is probably not going to kick in for about 1 year. Now, what do I mean by 1 year? Okay, you get disabled, you have to wait 6 months before you can even file. Now, you file for your Social Security benefit, and it is probably going to take another 6 months before the claim is processed and completed. So, you're without it, again, if you had none. But if you have something like this, at least you've got that coverage. But remember, during this period of time, you were receiving an advance of that Social Security benefit. What's going to happen when you hit the 1 year window is you're going to have Social Security saying, okay, we recognize the benefit should have started 6 months ago. We failed to pay it. So we're going to go back and we're going to back pay you for that loss of that income. Okay, great. Well, now they get a nice whopper check. Not good from the standpoint that, again, they were advanced. So that the funds that they would have been advanced, they wouldn't be entitled to based on the coverage that they were receiving here. So those funds are going to have to be paid back. Very important to note. So this is going to cover them. It's going to give them the money before they can get the money, because this is when they need it the most. But once they get the money in advance, and it's kind of like a chargeback, they're going to owe the money back to the carrier for what they received as an advance against that. If they don't give it back, basically what's going to happen is the carrier is going to diminish the premiums or the benefits that they were going to pay out until they receive the adequate coverage or the monies that the individual already received. So that's the situation. Okay, so here again is a breakdown. Underwriting medical guidelines based on the benefit amount. We know our client came in with about a $3,500 benefit, so he's going to have simplified underwriting. There is going to be an interview, but where we're going to go out all the way out to 65, it's going to require that it also include blood and urine. Physical data that's going to be obtained with the APS, etc. Higher dollar amounts, you can see additional underwriting guidelines. Breaking it down into the disability of the time, the 2 year. Here we are in our benefit to age 65. All the necessary financial guidelines. In other words, what they're going to have to prepare to receive the benefit underwriting. Let me simplify things in one respect. If you have an employee that receives their W-2, they'll turn in their W-2s as a proof of their income. It's really simple in reflection on that portion of the financial responsibility. If you have a person, though, that's an independent businessman or woman, they would need to have at least 2 years of independent tax returns provided to the carrier in order to make a valid decision on their eligibility. So it's going to be more than just, again, W-2s, which again are the easiest when you're talking about the individual employee, but the sole proprietor is going to have to show a couple of years worth of full employer or full tax records. Here's a scenario to look at as far as the premium costs. As we built it for Thomas, we built him with a 90-day elimination. We took him out to age 67. We saw what that premium was coming in at. Here's some other things that you could do. It's just kind of a little background on it that you could change the benefit period. By so doing, of course, you're going to lower the premium. You could lower the percentage of that income to be replaced by Social Security if you didn't have the need for those amounts of dollars. So again, just showing you as they show it as a good, better, best scenario and what that would do to the effect of the premium. As we approach the hour of 10 o'clock again, I want to thank you for being with us this morning. I want to also let you know that again next week we're going to pick up with a presentation from Mass Mutual. We're going to do a little bit of long-term care funding options through a life insurance policy. Following that with the information on some basic work on indexed universal life. And then again, we're going to have our time period for the expo, a little time off, and we'll be back on it with some additional products that'll be designed around the actual marketplace you'll be affiliated with. So with that in mind, again, once more, Mark Conter signing off. Thank you very much for joining us this week.